When you look at SCHD on YouTube, you can see it's one of the hottest ETFs right now. There are tons of videos, forums and investors talking about it, and for a good reason. If you are an European investor who's trying to buy SCHD, you've probably noticed a big issue. You are not able to. But don't worry, because in this video I'm going to show you a simple workaround so that you are able and can access this popular ETF from Europe. And just to be clear, this isn't a clickbait, because by the end of this video you will know exactly how to buy the SCHD, and even if you are based in Europe. So sit back, relax, and let me walk you through it. So if you type SCHD into YouTube or Google, you will see hundreds of videos talking about it. And there's also hundreds of videos where YouTubers are talking about looking for an alternative. And there is a reason for this. SCHD has built an impressive track record and is an incredible popular ETF. Why? For starters, but also for retirees, for example, it offers a unique blend of growth and income. And that's really interesting in an environment with low interest rates. So let's start with its historical performance. SCHD, which stands for the Swap US Dividend Equity ETF, has had an impressive return over the past decade. On average, it achieved an 11.7% annual returns, which is remarkable for a dividend-focused ETF. This ETF combines both capital appreciation and income, as it focuses on high-quality US companies with a history of strong dividend payments. So not only are you getting price appreciation, but you are also getting a steady income stream through dividends. And that's the reason why I like this ETF so much. Another major selling point is its costs. SCHD has an incredible low expense ratio of 0.06%, and therefore it's a very affordable option for investors. When we compare the cost of SCHD with other similar ETFs, it stands out as one of the most cost-effective choices in the dividend growth category. And then there's its sector diversification. SCHD is well diversified across different sectors, so SCHD has proven itself resilient, and that's why so many investors find it attractive. So for many European investors, SCHD looks like the perfect addition to a well-diversified portfolio. So you might think, okay, this is a solid ETF, I will just add it to my portfolio, but then you go to your brokerage account, type in a ticker SCHD or try to find the ISIN code, and then nothing. You are suddenly met with the dreaded not found error message. And this is really sad. This is where things get tricky for European investors, and here's the reality. European investors are restricted from buying certain US ETFs directly. So why is this? It all comes down to regulations, specifically something called MiFID II. In Europe, ETFs must provide a document known as the Key Information Document, or the Key ID, in the investor's native language. This Key ID explains the risks, the costs and expected performance of the ETF in simple standardized way. Now here's the problem. Many US based ETFs, including SCHD, don't provide a key ID for European investors. And as a result, European brokers are generally not allowed to offer these funds directly to retail investors. So as if we as European investors can handle a bit of English with Google Translate and AI all over the place, and even though we are still making this kind of videos to find some workaround, thank goodness the regulators are here to protect us from trying to understand an ETF ourselves, right? So the logic behind this regulation is that it protects European retail investors by ensuring they understand what they are investing in. But there's some controversy around whether this actually protects investors or just restricts them. For instance, in the Netherlands, large asset managers and other professional parties can buy SCHD and other US ETFs, but retail investors are blocked from direct access. So you have to go through an asset manager where you are paying fees that can be as high as 1% or more to be able to access this ETF. But we all know that extra cost eats into our returns. So if your goal is to hold a simple low-cost ETF like SCHD for the next 20, 30, or maybe even 60 years, paying that additional 1% to an asset manager can really hurt your long-term gains, right? So we need a professional party to hold our hands and explain how this ETF works, because apparently we can't manage that ourselves.
That's stupid! Use your common sense!
Okay, you got my point. At this point, many European investors are looking for an alternative ETF available in Europe that's similar to SCHD. Well, there are some European ETFs that follow similar high dividend or dividend growth strategies. None are quite like SCHD, honestly. Take the Vanguard FTSE All World High Dividend Yield ETF, the VHYL, as an example. It charges an annual fee of 0.29% compared to just 0.06% for SCHD. While this may not seem significantly higher, the impact compounds over the years, which can be substantial. And additionally, over the past 10 years, VHYL has delivered an annual return of 6.43%, whereas SCHD has achieved an impressive 11.7%. Can you do the math? And of course, we all know that past performances is not a guarantee for future results. And ultimately the choice is yours. But if you are like me, you prefer the SCHD for this simple reason. So if you are interested in investing in the SCHD or similar US based ETFs, there's no need to worry, because we will discuss a straightforward workaround shortly. So here's the good news. There is a way for European investors to buy SCHD. It's through a platform called Tasty Trade, and I will put the link into the description as well in the comments. Now, Tasty Trade is a brokerage that allows European investors to buy US-based ETFs like SCHD and the VOO, for example, even with the European regulations in place. Setting up an account on Tasty Trade is fairly straightforward. It requires some basic steps, but as a European investor, you may need to be aware of a few additional steps. After setting up your account, you will be able to buy SCHD. However, there are a few things to consider before diving in. While Tasty Trade offers a great solution, it's not without some potential downsides. Number 1. The currency conversion. Since SCHD is a US based ETF, you will need to convert euros to US dollars to make your purchase. Many brokers charge a currency conversion fee, which could add a small cost to each transaction. That's the reason why you could use websites like Wise or Currency Fair to transfer the euro to US dollar quite easily. Number 2. The tax implications. US ETFs may also have different tax treatments compared to European ETFs. For example, dividends paid by SCHD could be subject to US withholding tax. In many cases, you are able to claim a partial refund on this tax if there's a tax treaty between your country and the US, but it's something to keep in mind. Number 3. Experience and the interface. Tasty Trade's interface is somewhat different from other platforms, so there may be a slight learning curve. However, any investor finds it straightforward after getting used to it. And to be honest, you only have to buy 1 or 2 ETFs, and the rest of the platform you don't use it at all. Number 4. As a European investor, you encounter restricted access to US ETFs. I found a workaround that I personally use with Tasty Trade. Still, you want to remain mindful of these regulations that are involved. I've had no compliance issues. However, you are fully responsible for your own actions, so be aware and know that this is not financial advice in any way. So I've personally used Tasty Trade to buy US ETFs for over 2 years now, and I found it to be a very effective way, without needing a professional investor account or incurring high fees from asset managers. And in that time, I haven't encountered any significant issues, though I did find the trading platform a bit less user-friendly and lacking in detailed statistics. Nevertheless, the ability to invest in US ETFs is my primary reason for using it. If you find this information helpful, be sure to subscribe to my channel to stay up to date on any changes when I found a better platform, for example. While Tasty Trade might not be for everyone, it has worked well for me. It allows you to keep your investments straightforward by buying directly into SCHD, for example, or other US ETFs without having to go through a European asset manager. So I will include the link to tastytrade in the description and comments if you'd like to explore this option further. So that's it, a simple workaround for you as an European investor to buy SCHD. If you want more detailed information about SCHD and why it's a highly attractive ETF for dividend growth and long-term income, you can look into this video. We do a deep dive into this ETF, and remember, be sure you are well informed before you start buying. This is not financial advice in any way, it's only my workaround for buying US ETFs as a European investor. See you in the next video.